Disclaimer, I am not a financial advisor and this is not financial advice. Investing always comes with risk, and it's important to do your own research and consult with a financial advisor before making any investment decisions. Hey there, investors. Today, we're going to talk about one of the most exciting and potentially lucrative investment opportunities out there, the S&P 500. Whether you're a seasoned investor or just starting out, the S&P 500 is a great place to consider putting your money. So, why is the S&P 500 such a great index fund to invest in? Let's find out. First of all, let's define what the S&P 500 actually is. The S&P 500, or the Standard & Poor's 500 Index, is an index of the 500 largest publicly traded companies in the US, representing about 80% of the total market capitalization of all US stocks. These 500 companies come from a wide range of industries and sectors, including technology, healthcare, financials, consumer goods, and more. When you invest in the S&P 500, you're essentially investing in a diverse range of companies and industries all at once. This is important because diversification is key when it comes to investing. By spreading your investment across a range of companies and industries, you can mitigate some of the risk that comes with investing in the stock market. If one company or industry performs poorly, there's a good chance that other companies or industries in the S&P 500 will perform well, helping to balance out any losses. Another reason to consider the S&P 500 as a great index fund is cost. Index funds, like the S&P 500, are typically much cheaper than actively managed funds. Actively managed funds require a team of managers to buy and sell individual stocks, which can be expensive. But with an index fund like the S&P 500, all you have to do is buy shares in the index fund, and you'll automatically have exposure to the 500 largest US companies. On average, S&P 500 index funds have expense ratios of around 0.05% to 0.10%, compared to the average expense ratio of 1.25% for actively managed funds. This means more of your money stays in your pocket, rather than going to fees. Now, what about performance? That's the most important factor, right? Well, the S&P 500 has a strong track record when it comes to performance. Over the long term, the S&P 500 has historically outperformed the vast majority of actively managed funds. In fact, over the last decade, the S&P 500 has returned an average of 13.5% per year. While past performance is not a guarantee of future results, the historical performance of the S&P 500 suggests that it can be a strong investment option over the long term. And finally, the S&P 500 is convenient. Investing in the stock market can be overwhelming, especially if you're new to it. But with the S&P 500, you don't have to spend hours researching individual stocks, or worry about timing the market. All you have to do is buy shares in an S&P 500 index fund, and you'll automatically have exposure to the 500 largest US companies. This can make investing in the stock market more accessible and manageable for many people. One of the best things about investing in the S&P 500 is that you don't need a lot of money to get started. With fractional share trading, you can buy a portion of a single share of stock, rather than having to buy a full share. This means you can start investing in the S&P 500 with as little as $5 or $10, depending on the broker you choose. There are many brokers that offer fractional share trading, including Robinhood, TD Ameritrade, and Charles Schwab, to name just a few. These brokers make it easy for anyone to invest in the stock market, regardless of their income. You can set up a brokerage account online in just a few minutes, and start investing in the S&P 500 right away. Another option is to consider a robo-advisor like Betterment or Wealthfront. These platforms use algorithms to manage your investments for you, and they typically offer fractional share trading as well. With a robo-advisor, you don't have to worry about choosing individual stocks, the platform will do that for you. All you have to do is select your investment goals, and the robo-advisor will handle the rest. So, whether you're on a tight budget or simply don't have a lot of money to invest right now, investing in the S&P 500 is still a great option. With fractional shares and robo-advisors, anyone can start building their investment portfolio and working towards their financial goals. Remember, investing always comes with risk, so be sure to do your research, consult with a financial advisor if necessary, and only invest what you can afford to lose. With that being said, the S&P 500 is a great place to start for anyone looking to invest in the stock market, regardless of their income level.